Hey traders, checking in on the stock market today. We were watching for the potential of hourly trend changes to set up for the bulls. There were no fake outs. The bears had complete control the entirety of today, and we closed down at the lows. We'll be watching for the potential of a bounce play. I'll be talking about how I trade bounces and some clues that tell me to stay away from trading a bounce. And we'll look at the bigger picture as far as how significant is this fear creeping into all different sectors. So the S&P 500, look at the bear volume. A lot of follow through. It was a weak open and we followed through very quickly. So open and broke the low of yesterday by 10 o'clock, which shows us bears in complete control still. Hourly RSI is definitely getting crushed in the S&P 500. And if we look at the S&P 500 futures, the 4-hour time frame, the RSI is down at 20. And if we look historically, the RSI has not gotten this beat up in 5 months, 6 months. I believe it was October the last time it happened. It can happen, but we're definitely reaching extremes. If I want to see the most clarity for tomorrow's trading, I want a gap down open, and I will be looking to buy that gap down open for bounces just like yesterday. Yesterday was a very easy day just in terms of knowing to be looking in only one direction, at least to start the morning, to buy that gap down. So I would like gap down opens. And the possibility is there because of our closes all down at the lows as the VIX closed up at the high. The last time we saw that was on Monday, which did see gap down follow through. It's 50 degrees and rainy, which is why I'm in my Eskimo outfit. So we have an hourly downtrend as well. SPY, next time we bounce, anything under 408.61, just an hourly lower high. Again, cannot stress enough, the bears are in absolute complete control. In the video yesterday, I talked about scouting growth names for rotation. Obviously, that wasn't going on today. And again, that's something bigger picture that I'm observing on a daily basis. But it's going to take days, if not weeks, for something to develop that is going to be actionable for me personally. And I'll keep checking in on that, but certainly not a short-term scouting event. So the next level on SPY, weekly EMA 12. Why does this matter? Because we've been holding it since the last time this RSI got that beat up at the end of October. And if we were to lose that level, it would stand out to us that things are shifting. As far as the uptrend, I would call anything above 383.90 a weekly high or low, which means we can pull back 5% more and still be in a weekly uptrend. QQQ. So again, look at where we opened compared to the low of yesterday. The setup yesterday was, can we confirm an hourly trend change? We had a bearish reaction to CPI numbers this morning at 8:30 a.m. and that just put the bears in the driver's seat all day. And now we've got the inflation narrative going on. And again, just all bear volume. And what stood out to me, and that what had me not looking to aggressively play bounces, look at this stair step down on the short-term time frames. We had a 5-minute equilibrium into the open. We broke it bull with no follow through and then hit a new low of the day. So look at the RSI. At this point in time, QQQ is down 2%, 2.5%. The 5-minute RSI never gets overextended. How does that happen? Short-term bear flags. These little bounces, this one little green candle, I know was a 2-minute bear flag. Another 2-minute bear flag. It cools off the RSI. That allows for a slow, steady grind down. When I am aggressive with bounces, it is flushes. It's a waterfall flush. Clear out the order book so that when we bounce, it can be a V-shaped bounce because we just cleared out every order within this price range. If you're stair stepping down every time you see a little bounce, you're doing two things. You're creating a new resistance level, but you are also cooling off shorter-term RSI levels to keep that move going down. We did not change the 5-minute trend bullish until afternoon. And then once we did, we knew just zoom out and look for a 15-minute lower high, which it was. Double bottom at the low of the day, 15-minute lower high, triple bottom at the low of the day, 15-minute lower high, and now down at the lows in extended hours. The bears still have complete control. And again, I want to see a gap down open for things to reach short-term extremes to just see an hourly oversold bounce for short-term bull trades. I did exit a little bit of my bearish positions after swinging FAZ and SQQQ last night. I kept SQQQ, and I still have some of that. And the trade for me was adding a bit of the position on on the break of the low of yesterday at 319. But I did exit FAZ too early, and I'll look at that when we look at XLF. But I do still have a little bit of a bearish lean into overnight and would love a gap down to make tomorrow nice and easy. Doesn't mean we'll bounce right away just like Monday, but it just means I know I'm only looking in one direction, and that's all I'm focusing on the morning. If we get a higher open, there's a bit more ambiguity. IWM. So big drop. And again, this weekly chart on IWM, if you're a long-term bull, is saying, be cautious, the shift is on. Losing weekly EMA 12, we still have two more days to go, but we're shaping up to lose the weekly EMA 12 for the first time in 5 months. Losing the higher lows for the first time in 5 months. And after a rejection from the all-time high, if we see a bear break of 207.21, we then don't have a ton of support nearby. Monthly time frame, consolidation is on the verge of being underway. Look at how little monthly consolidation we've seen since $95. We went 140%. We had one little month with a bull flag. This is shaping up to potentially be a bit more bigger picture monthly consolidation. Inside bar bear break on the monthly. Maybe we're going to be targeting the monthly EMA 12 if this keeps up. XLF. Bear volume standing out. So we are still in a daily uptrend. The reason I exited FAZ too early is the bulls showed up on the CPI numbers, consumer price index, CPI numbers. So big time move. Look at that, 36.62 to 37.51. And just seeing the shift being on with QQQ down and XLF up, I've seen that inverse relationship 95% of the time in the last 4 months. So I said, okay, I'm exiting my FAZ, knowing I'm just looking for a daily high or low. I exited in the morning here, somewhere around here. And then we obviously faded back down and kept very weak. So left money on the table there. But overall, not sure I'd do much else in hindsight. I guess the only difference would be scouting an hourly low or high. Nah, because we broke hourly resistance. I don't have too much an issue with my exit there. Again, in the end, it left money on the table, but as far as signals, I'm okay with my exit. But we need an hourly trend change back to the bulls. Look at the RSI. On the hourly, it's not getting too beat up. And anything above 36.04 is a daily high or low. I'm looking back at previous pullbacks. What is most notable to me is after the fear subsided, we never confirmed a daily downtrend. Big pullback, continuation. Decent pullback, continuation. So what will make this time different, whenever we find a bottom, wherever that is, if we confirm a daily downtrend, I will then say monthly consolidation is likely. And when I look at this monthly chart, monthly consolidation is absolutely due. Doesn't mean it has to happen now, but any monthly chart that looks like this has me as a cautious bull because it's very extended. So I will be scouting if I'm going to make another re-entry, a bearish XLF position, because I'm back to even, break even, not break even, but no position. I will be scouting a daily lower high and top fishing the all-time high. This is a big enough pullback where that will be my mindset next daily bounce. But for now, the bears do have complete control in the short term, and we closed weak. Next support level, 36.04. Healthcare sector continuing to pull back. Little support level of 121.73 breaking, but 121.03 matters more to me. And we look at the weekly chart, and that is a little support level there. But anything above 113.35 is a weekly high or low. Weekly uptrend is not at risk here. Looks a bit like a rising wedge. That's a rising wedge. It's a big old rising wedge. Keep an eye on that. And we can just use the weekly EMA 12 as a guide. That's lining up with the support line on this wedge. That's the first time I'm seeing that. Someone did mention in the YouTube comments to check out, I had put this resistance line up 6 months ago, I think he said. But this is relevant. It might have been a different resistance line. Either way, this is now on my radar. And this is why I like doing these videos, because it is homework for me just as much as it is putting out information. Biotech sector held up really well today and actually made money bullish on the biotech sector. So watching for the hourly trend change setup just like everybody else. And we got it. We got the hourly trend change. So the bulls showed up first thing in the morning. The bull entry that I made was looking at this support level and a double top at the high of the day. But I was just noticing we are correlating bullishly to XL or to QQQ. And so that made me think, okay, well, if QQQ can get any kind of meaningful bounce going, then XBI is positioned well to confirm its hourly trend change. So I saw this quick little 5-minute high or low, a double top at the high of the day, and on this consolidation, I made an entry. And I said, okay, there's a double top, absolutely, but I have a clear stop level to go off of, and it's a low-risk trade. So I made an entry right around 125, and I put my stop under 124.50, and I gave wiggle room of 15 cents at 125, make that 124.35. And it was only just by luck that I missed stopping out by a few pennies. I was just sitting there saying, all right, I'm about to stop out. And we just kept holding it. And then we got the bull break with really nice follow through. I then recognized a couple of things. Number one, a triple top. I said, okay, exiting half of my position. And number two, from there, I forget where I exited my second half. I probably gave it another chance here to a new high of the day. We failed. And as soon as we started fading back down here, exited the second half of the position. Because at that point, it was very clear the bears had complete control on the broader market. And even though XBI showed us relative strength and had a bullish correlation all morning, can't fight against the broader market momentum forever. And if QQQ and the broader market is not going to help, we gave the move back. Still in an hourly uptrend. And again, it held on better than everybody else. Really, the green sectors today were energy and biotech with everything else red. But we're just looking for an hourly lower high next bounce, anything under 127.47. I knew I did not want to swing this position with the broader market so weak. And if I look at this daily chart on its own, yes, it was relatively stronger than most names today, but it's still a weak daily chart overall. SMH, big drop again after that big green a day. What does this tell me? This tells me that the hourly and the 4-hour RSI cooled off yesterday. And that allows for another leg down. Again, it's not your waterfall drop. If this were a big red day yesterday, and then again today, the RSI levels on the 4-hour and the hourly right now would be absolutely crushed. But it was that green day that cooled everything off, and it's just a bigger picture version of what I was talking about with the 2-minute and the 5-minute RSI cooling things off. My style, trading bounces, is my aggressiveness will match the bears. If we are flushing and triggering stop losses and in free fall, I get aggressive. If we are stair-stepping down, I am not aggressively buying dips for a bounce, which is why I like gap down opens when things are at extremes, because that creates space in the order books for a move back up. If we skip chunks of the order book on a gap down open, bounces bounce easier. Tan. Daily inside bar. A lot of names with daily inside bars today. Pretty much the names that were weakest, the growth names, the names that were weakest before yesterday, that bounced the hardest yesterday, they've got daily inside bars. So ARKK, PLTR, all these names with daily inside bars to be watching, but weak closes. And if we break 68.91, 67.69 is the low. And again, the bears are in complete control. Today was a day where the burden of proof was on the bulls. Okay, nice bounce yesterday. Didn't change the hourly trend. Prove hourly trend changes to us. Only XBI did out of names that I was watching. And certainly, everybody else failed. Just a day of bull failure. MSOS, daily inside bar. We would have to break it bullish and break 44.14 for a notable shift. Anything under 43.30 is just a daily lower high. Skeptical of the bulls. I want the bulls to succeed. I still have some small swings in some of these names heading into their earnings, but I am very skeptical because the bulls are proving nothing to me. The VIX, big follow through, decently strong close, 31.9, 37.5, next couple levels, and keeping the hourly uptrend and EMA 12. Look at that grind of EMA 12 yesterday into pre-market, and then the CPI numbers had us follow through with another leg up. So we can be watching trends and EMA support just like we would regular stocks, just as a visual guide for control. And at no point did the VIX bulls lose control in this hourly time frame. Dollars bouncing in a big way. Watching very close. We're looking for the potential of a monthly high or low. Low, high of the bounce was notable. Big solid bounce. Gave most of it back. But if we can confirm a daily trend change, anything under 91.44 is just a lower high. If we reject from that level, bulls will be hoping it's a big enough bounce to try and shape up an inverse head and shoulders. If we change the daily trend, monthly high or low will potentially be set. If we don't change the daily trend, we're not talking about a monthly high or low. So that's a bare minimum. If we set a monthly high or low, we then have a potential monthly trend change. If we change the monthly trend, we have a 4 to 5 year, 6-month equilibrium that will be setting its high or low. So that's looking way out. There's a ton of proving that the bulls need to do. But again, I've just got different lengths of time of setups that I'm watching. I'm watching the 6-month chart. I've never watched a 6-month chart in my life, but I'm watching it on the dollar with the monthly. I'm watching the monthly chart on our growth names. Again, nothing actionable on these long-term time frames. It's just something I'm watching over the weeks. I've got stuff that I'm watching on a 1-day basis, stuff that I'm watching on a multiple week basis, and stuff that I'm watching on a multiple month basis. That keeps always something coming down the pipeline. So gold attempted a daily bull flag. We failed the high, and now we're back into consolidation mode. Still no major red flags. Definitely on a day like today, fear permeates lots of markets. Crypto and gold are not immune to broader market fear. We held on real well the last couple days. I'm still looking at it as a daily uptrend. And I would say if the bulls keep the EMA 12 support, then they keep strong. So that's the goal for the bulls here, to stay comfortable. And silver's the same. EMA 12 coming into play. So I would call it failed bull flags for now, but still trying to maintain the daily uptrend. Miners, higher open, but pull back all day today. Just looking for an hourly lower high next bounce on GDX. And if we see a bear break of 36.50, no daily high or low has been set. Again, great bounce yesterday, but if you do not confirm an hourly trend change, we cannot be confident that daily high or lows are being established. And that was the case. It was a great big old bounce, but no hourly trend change. You gotta prove follow through. Oil, double top to be watching. It'll only be very notable to us if we break that low of 63.68. So the bear break with no follow through was notable, but unable to break resistance with the inventory reaction today. Very key resistance right here. Triple top now. And natural gas holding on a bit stronger. Bear break with zero follow through. And we are still up at the high. 2965 is the next resistance level to be watching. So other than that, what did I do today? PLTR, I had a trade. So I know bigger picture, I'm watching PLTR for an hourly higher low compared to the low of yesterday. So what does that mean? That means I watch shorter term time frames for potential indications that an hourly higher low is shaping up. I then was watching a 2-minute falling wedge. At this point, we were down 6 or 7% on the day. Bears getting a bit extended, running out of momentum. So this was the falling wedge I was watching, and I started watching it right here. And I said, okay, that's a big enough bounce. I'm entering on a 2-minute higher low, and I went real big. I don't remember the last time I traded PLTR, but I went big enough to where it was double what a normal Tesla-sized position is for me, and a normal Tesla-sized position is fairly large because I'm very comfortable trading it. So I went double the size of Tesla. Why? Was I extremely confident? Not necessarily. I was fairly confident, but it was more to do with the fact that my risk was so small because my stop loss is right there. So I'm scaling in the 1880 to 1878 range. My stop, I'm going to give some wiggle room because the definition of a wedge is bear breaks with a lack of follow through. So stop will go 1869, but I'm risking 0.5%. And the reward, if that pattern breaks bullish, is multiple percent. So, 2% reward to the upside. I'm getting 4-to-1 risk to reward. So I went real big. And as soon as 1893 broke, I started scaling out a little bit. When I go real big, I scale out even a bit faster than I normally do. So scaled out a quarter of a position on the 1893 break, scaled out another quarter of a position on the $19 break, scaled out another quarter position at 1905 or so. And again, I knew to just be looking for a 15-minute lower high as a result of that 2-minute falling wedge, because anything under the high of the day was a 15-minute lower high. At that point, I exited 3/4 of a position. I can't lose on the trade no matter what. And I keep a quarter to say, okay, if the bulls set an hourly high or low and set up an hourly trend change, just like XBI just did, then I will keep a position. If the bulls can convince me to swing this position, I'm open to swinging it. And obviously they didn't do that, and I stopped out. So the gains of the 3/4 of a position far outweighed the small loss on the quarter position. But that is my mindset when I'm looking at bigger picture moves. I always sell partial positions to try and lower my cost basis and position myself in low risk or risk-free trades. So don't regret that as far as stopping out of the last quarter position. Other than that, I don't think I took many other trades today. Sat in SQQQ. I will not exit SQQQ into bear strength. The only way I'm going to exit SQQQ is if bulls prove something to me on the hourly time frame. So I was down in metals and my SPY long-term no touch and USMJ today. I was actually down in FAZ as well, because by the time I exited, it was higher than where we closed. I was up in SQQQ, up in that PLTR bull trade. In the end of the day, ended green. Not a very notable day, but a small step forward, and I will take it. Give me gap down opens tomorrow to go aggressive as a bull. We'll see if we get them. Have a good rest of your day. So I'm out of end of video content here. We're going to go back into the archives. This is from 11 years ago. The original video is like 45 minutes long. I've edited it down into about 10 or 12 minutes, cutting out all the illegal activities. But essentially it was sophomore year of college, and watched Into the Wild and was inspired and just said, all right, we're going to Yellowstone. I'm going, whatever break we had, who's coming with me? So a few of my buddies jumped on board. We took a car 36 hours straight to get there. We went into the backwoods for a week. We did a week-long hike, and we made so many mistakes. We were so dumb, but it was so much fun. We didn't bring anywhere near enough food. I went into the backcountry of Yellowstone. We were hiking 6 to 8 miles a day, and I brought a backpack. I didn't even have a camping backpack. We didn't bring anything in terms of sleeping mats, and we had a tent that fits 4 people, and it was 4 of us men. So we were literally cigar-shaped, 4 of us in this tent, and we ran out of, we were hiking on fumes. Essentially, we had a ramen noodles pack every night to be looking forward to, and we're really lucky to have made it out alive. So here is the PG version of Yellowstone trip. Let's see, at that point in time, I was 20 years old. I wasn't even 21 yet. Maybe just 21. Here we go.
Oh, there it is.
Good day.
I'm not about to shred this. Dan, you just pop yourself out that top window there.